Hey guys, what is going on? Welcome into the video. So in this one, we're going to talk about what played out in the market last week and how to trade that moving forward, and then get into some of the top setups, fundamental and technical, for the month of March ahead. So let's go ahead and get into it. So starting out, let's recap what played out in the broad market last week. We've been talking about this major decision point for the S&P at the backtest of this major trend line for the past few weeks, and we got it this week with it holding and putting in a very strong balance and reversal move off of that spot. So zooming into the futures chart, this lays out a pretty classic technical story. The S&P had 7 straight days of choppy consolidation between 40-20 resistance and 39.50 key support, which also aligned with the 200-day moving average and the long-term trend line below as well, so this was a major spot. On Thursday of last week, bears attempted to break down below that 39.50 level, but failed to follow through, and once it reclaimed back above, it triggered that classic false breakdown reversal setup, moving to the upside. So we've talked about this setup a bunch before on this channel as one of the most powerful patterns. Once a breakdown happens, there are a lot of shorts that come in to take bearish positions, but if that breakdown fails, those sellers are forced to cover their positions, and it usually results in a short squeeze and violent move to the upside, which is what played out on Thursday afternoon and all day on Friday after breaking out of the top of the range. So now this move puts bulls back in charge of the trend and most likely continued upside. Now I'm personally very bearish on the macro data we've been seeing and fundamentals moving forward, but of course only price pays, and until proven otherwise, the technical trend is bullish, so that is the direction I will focus my trades on until that trend turns around again. Alright, so let's talk about what is likely to play out next for the market and how should we trade it. So the S&P is nearing a back test of that white trend line off of lows, which will likely act as strong resistance if that does get tested. My personal game plan for the week ahead is looking for a rejection to play out next in that 40.50 to 40.65 area, and then pull back to likely backtest where it broke out of as new support, playing out something like this. The main spots I'd be watching are the 40.25 to 40.30 zone, and if that fails, the bigger spot at just above 4,000. Breakouts out of major chop zones almost always come back to retest it as support. For example, that breakout we had back in January that had that big run to the upside came back to backtest 3,900 as new support and actually did so twice. So in the week ahead, I'd be watching for something like that to play out with the low 4,000s as the biggest area of dip buy interest. My technical lean is bullish as long as that area holds, and would expect that we're back in a buy the dip market for the time being as long as that holds. If this does break back below 4,000, that would be a sign of caution though, and below 39.74 would be my line in the sand of sorts where it made the first higher low after the rally. If it was to fail back below that 39.74 level, I would expect that it sells back down to 39.50 and would likely fail and break down if it was to be tested again. Alright, so now taking a quick look at the economic calendar for next week before we get into some individual trade ideas. The Powell testimonies on Tuesday and Wednesday are potential market movers, depending on what is said, and the most important data point is the JOLTS report on Wednesday at 10 a.m. Eastern. If the market can get past these events and hold up, there's a good chance that we see a continued rally until the next CPI data report and FOMC meeting in the next few weeks ahead. Alright, so now getting into some individual trade idea for the month ahead. We're going to start with the fundamental idea in Marqueta, ticker symbol MQ. So this company had a pretty substantial drop last week after a miss on earnings, and it's looking like a great opportunity at these levels in my personal opinion. So it's currently trading for a $2.67 billion market cap, and what's super attractive about this is they currently have $1.62 billion in cash and $1.77 billion in total assets, with less than $300 million in liabilities. So this company essentially has $1.5 billion in assets minus liabilities, with just a $2.6 billion market cap. Now this is currently an unprofitable company, but they are getting closer to profitability now, only expected to lose less than $100 million per year, so they have a very long runway and is showing great revenue growth with 45% last year and is expected to grow a little over 20% in the next 2 years. Marqueta also has great gross margins at over 40%, so if they wanted to be profitable they could, but of course they're continuing to focus on growth, which is just not what investors have been wanting to see in this current market condition. The company is an innovative card issuer with customers such as Square, and overall the stock has very limited downside due to their capital and balance sheet position in my opinion. The technical setup also reminds me a lot of Twilio after their earnings gap down, a stock that we talked about as a buy in the beginning of the year in January. It has a lot of similarities there as well with their great balance sheet to equity ratio. Overall, there could be a few different bullish catalysts on the horizon to watch out for that could boost Marqueta stock price big time. Number one is they announced a share buyback. This is something that Twilio announced recently that boosted their stock big as well. And Marqueta has 1.6 billion plus on the balance sheet to do whatever they please, and the most likely thing they will do will be to buy back shares. Number two is we see an activist investor come in and push towards profitability. Activists love to come in on beaten down stocks with great balance sheets. And number three is we see a much larger company buy them out, such as Square, which is already their biggest customer, or a giant like Visa or MasterCard. And if there was a buyout, it'd likely be at a 50% plus premium to current stock price levels. Alright, so now getting into a few technical focused setups. Starting out with a solar name in ARRY Technologies, ticker symbol ARRY. This stock has been building out a great looking base since July and is currently bouncing strong right off trendline support. Zooming out on the weekly chart, also has a great look, building out a multi-year inverted head and shoulders pattern. Great risk reward setup here with a stop loss below that trendline support, where it could start a major breakout above the 24.29 resistance level. Next up is another solar name in Shoals Technologies, ticker symbol SHLS. This is currently bouncing off that long-term trendline resistance as new support and is also set up in a potential smaller time frame falling wedge and longer time frame inverted head and shoulders pattern as well. Another great looking risk reward setup here where it can start a leg higher above that 27.5 to 27.8 zone along with that trendline resistance of the falling wedge. So the next bullish setup that I'm watching is Arhaus, ticker symbol ARHS. This stock has been one of the strongest in the market for a while now and riding up well along that 50-day moving average as support. It's also in the process of building out the handle of a potential multi-year cup and handle pattern. This is an idea that I'm watching for either an entry above the 15 to 15.27 breakout level, and if so, would have a tight stop loss just below there, or it could be an entry opportunity during this handle build out with a stop loss on a close below the 50-day moving average. Overall, the bigger and longer the base that it's able to build out right below this breakout level, the cleaner the breakout will be when it does play out. Another similar setup to Arhaus is Nuvalent, ticker symbol NUVL. This is also setting up in a multi-year cup and handle pattern and also building out a falling wedge within that handle. This is a setup that I'm watching for a break above that trendline resistance of the wedge to potentially start the move to retest that 40.5 to 40.82 resistance and cup and handle breakout trigger above. And the last one we're going to talk about is with Uber stock. So this broke out of its year-long downtrend back in December with a very strong upside move and now has cooled off and is building out a nice bull flag pattern. This is another long idea that I'm watching with a stop loss below 31.8, where we can see upside above the trend line back to the 37.5 resistance level, where the next leg higher would start if it's able to break above there. So that is everything that I'm watching with the broad market and individual trade ideas for the month ahead in March. Hope you all enjoyed and provided some value to you. If so, make sure the like button and subscribe button would greatly appreciate it and it helps me out a lot. For anybody interested in joining the private Discord chat, that is the first link down in the description. To get my personal trade alerts, nightly watch lists, and you can ask me any questions in there. I'll catch you all next time. Thanks for watching. Good luck trading this week, and peace out.